What are the various types of audit? We shall be discussing them today. The first in the list is the statutory audit. As the name suggests, it is made compulsory by law. The statute which is governing the organization has made it compulsory to conduct this type of audit. Therefore, the name arises the statutory audit. Legally required. Review of the accuracy of the company's financial statement or the government organizational financial statements. You have to conduct this audit because it is made compulsory by law. There is no other option. Audit in case of companies, cooperative societies, banking companies, general insurance companies, electricity supply companies, all types of trusts, etc. The governing bodies or the governing statute ask you to conduct this type of audit. Statute means the law or the regulation enacted by the legislative branch. Let's say the state law requires that all the municipalities, they should submit an annual statutory audit. It is conducted only by a professionally qualified CA because it is made compulsory by law. So you have to obey certain restrictions for the same. The scope of the audit, it is not to be decided by the client. It is determined by the law. The client cannot intervene in the functioning of the statutory audit. The rights of the auditor, the duties of the auditor, everything is to be determined by the law. Second in the list is the tax audit. We have made a separate video, an article on tax audit you can go through. It is conducted under the section 44AB of the Income Tax Act. The purpose is to ensure the correctness of the books of accounts, whether they are in the compliance with the tax laws. It has to be conducted by a professionally qualified chartered accountant. It is a special audit. It is governed by the statute. The report of the audit is to be given to the particular tax authorities, and there is a specified form to submit the tax audit report. Next is the interim audit. Interim means a period of less than 12 months. The audit which is conducted for a part of the year, it is not conducted for full financial year. You are going to check the accuracy of the financial year, not for the full year, but for the half year accuracy is being checked. The audit, such an audit, interim audit, is conducted between two annual audits. This means that annual audit will go as per on its pace, but there will be an extra audit conducted between two annual audits. Conducted for a part of the accounting year, not for the full financial year. No, it is just conducted for say 4 months, 6 months, like this. Certain fixed period, the financial statements, they are put to scrutiny, they are channelized, they are analyzed. It helps to know the interim profits and the financial position for a certain period before the end of the financial year. Such type of interim audit is not at all required under any law. It is to be conducted by a chartered accountant. This results in quick detection, early detection of misstatements, errors, frauds, and therefore it acts as a good moral check on the employees. If a mistake has taken place or a fraud has taken place, so you don't have to wait for the end of the financial year to get it detected, because the audit is being conducted within a period of 4 months or 5 months, so easy detection and quick detection happens. This audit is considered as a warning signal, and it is not suitable for small organizations. It is conducted for interim purposes, usually for a specific purpose. For example, to provide an interim dividend. If the joint stock company declares an interim dividend, it becomes necessary to get the audit of accounts done up to the date. If interim dividend is to be given on September 30th, then audit is to be done from 1st of April to 30th of September. Another example can be cited is the determination of the valuation of shares in case of mergers. When you merge a company, you should know the value of your shares, and how will you come to know that? You will come to know that through interim audit. The balance sheet audit is conducted by a chartered accountant, and it is based on the supporting documents, but it has a limited scope because it is not compulsory by the statute. So the auditor cannot blindly rely on it. It gives very less assurance to the auditor. Next is the operational audit. As the name suggests, Here, what is being evaluated is the company's operations. We will be checking the operating activities of the company. Other types of audit, they look at one department or they look at company's finances, that's it. But operational audit is a wider term. It evaluates how does a company conduct the business. The aim is to increase the overall effectiveness. Regular audit restricts to the financial statements. But this audit is concerned with the operations of the company. Next is the concurrent audit. Now, a system which is present in the large banks, especially in the larger branches. It is carried out continuously throughout a year. It's not a one-point audit. It continues the whole year. The purpose is to check the effectiveness of the working and the internal control of the bank as well as of the branches. The transactions are examined as and when they take place. Happening at that time, audit which happens at that very moment when the transactions occur. Examination of financial transactions at the time of happening of those transactions. The audit runs parallel with the transactions, conducted regularly, continuously. That is why it is a comprehensive and systematic audit. The bank management, through the concurrent audit, easily detects the irregularities on an earlier and quickly detection is possible to check cash balance, KYC policy, loans, advances, forex transactions, everything. This audit can either be conducted by an independent chartered accountant. It can also be conducted by the internal staff of the concerned bank. Next is the management audit. The audit of the management performance is called management audit. How is the management of the company running? Whether the general management is functioning smoothly, satisfactorily, or there are a lot of flaws. All the activities are examined from top to bottom. The audit assesses how well an organization's management team is working in the interest of the shareholders, employees, and the company's reputation. Is everything going on hand in hand with the management? The aim is to find the weakness in the functioning of the management. Suggestions are given to improve the present condition. It does not evaluate the individual managers, but the focus is the overall management of the company in its capacity to achieve its goals and objectives. Management audit is a very significant tool to help the management in achieving the company's objectives. It is usually done by a team of management experts. It is very useful for ailing entities. See, if the management of the company is very strong enough and it's moving effectively, it happens in the good interest of the company. So management audit is a very important audit. Next comes the environmental audit. The examination of interaction of the business and the surroundings is called the environment audit. What are we doing to our environment? Are we polluting it? Are we doing justice to the environment? The audit is the systematic examination to assess the company's environmental responsibility. We as humans owe something to the environment. Similarly here, we're talking about the company's responsibility to the environment. This ensures how the organization and the management is functioning to protect the environment. It examines the potential hazards or the risks which are posed by the company. Recycling waste, conservation, pollution, all these matters are discussed. Conducted by a team of experts, obviously. Suggestions and measures for the environmental protection. How can the company help in protecting the environment? All these things are put up. Audit acts as a public moral support. Good public morality. This audit helps to protect the environment, minimize the risk of activities to the environment, and human safety and environmental goals. Ninth is the secretarial audit for bigger companies under Section 204. This verifies the compliance of applicable laws, rules, regulations, and guidelines. This compliance of legal and procedural processes. See, audit is generally considered with the financial aspect of the company, but this secretarial audit, it deals with the non-financial aspect of the organization. The statutory auditor, he will check the financial records, but a secretarial auditor, he will check the rules and regulations. Is the company going and following all the laws, rules and regulations and guidelines? This is what the secretarial audit is doing. Secretarial audit is the independent verification of records and documents by a company secretary to check the compliance status of the organization. Is the organization observing and behaving well with the rules and regulations? Is it obeying all the rules and regulations? This audit can be conducted by a CS, a practicing CS who is having a certificate of practice. For example, if it is a banking company, the auditors shall check if everything is in accordance with the Banking Regulation Act and the RBI Act. So whichever acts you have to follow, that particular organization, are you obeying all the rules and regulations and the guidelines and the laws which are set by that act? This is the work of the secretarial audit. Example, in an insurance company, the auditor will see if everything is as per Insurance Act and IRDA, Insurance Regulatory and Development Authority. Whichever authority you have to comply. Are you behaving well? Are you obeying well with the rules? This is the work of the secretarial audit. Secretarial audit is applicable to every listed company. Why for every listed company it's important? Because so many people, they have invested their hard-earned money in your company, and therefore the transparency is required. Whether you are doing good with the rules, that is why. Every public company having paid up share capital of 50 crore or more, and every public company having a turnover of 250 crore or more, secretarial audit is compulsory. Every company having outstanding loans or borrowings from banks or public financial institutions of 100 crore or more, again you have to comply with the secretarial audit. These companies will annex their board report, secretarial audit report, in the form of MR3. Secretarial audit allows early detection of violation by the company at an early stage. This is what is common for every type of audit. You are able to detect the violations very early. So here the violations by the company of the rules and regulations you will be able to make out at an early stage. This prevents corporate wrongdoings and also prevents the organization from facing possible non-compliance risk. If you are disobeying certain facts, certain laws, then you will be subject to penalty. So this audit saves you from all that. Basic feature is to see the compliance of the applicable laws and verify the legal and the procedural compliance, so that at a later stage the company doesn't land into a major trouble. Next is the internal audit. Internal audit checks the overall performance of the organization. As the name suggests, it is conducted by the staff internally. Now, you are going to check the overall performance of the organization very good in terms of administrative, executive, financial standards, legal standards on every sphere. It helps the management team to identify all the wrongs in the organization. Detection of corporate frauds, abuse of power, embezzlement of funds, everything is tried to being detected. Internal audit assesses the internal control. Is the company running on a good internal control? This internal audit will help you. Further, it provides consultancy services for improving overall efficiency and performance. Internal audit adds value to the organization's operations. So, obviously, add up happens. Internal audit, it can be conducted annually or monthly or quarterly, however the client wants. Internal audit identifies problems and their inefficiencies. Then it also suggests for the corrective steps. Internal audit makes sure that the risk management and the overall governance are moving in towards the objective of the company. Is everything going well in the company? Is everything, all the risk management, the governance, the operation, are everything going on? This is the work of internal auditor. Are the risks managed effectively? Are the processes operating correctly? The policies are good enough? How can the policies be improved to achieve organizational goals? The management and the board of directors get the service which adds lot of value. Any wrong process is caught and it is corrected immediately. You don't have to wait. All this is done prior to the external audit, and a strong internal audit helps you a lot in the organization. Next is the cost audit. I would like to mention that we have made a detailed article on cost audit. You can please go through it. Here I shall mention a few facts. It is mandatory for the companies which are specified under Rule 4. Now there are two types of companies under Rule 4. Type 1 is the regulated services and type 2 is the non-regulated services. Now which all companies will be falling under Rule 4? You have to meet the following conditions. Type 1, what are the conditions? The turnover of all the products and services of that particular company should be more than or equal to 50 crore. The turnover has to be greater than or equal to 50 crore, and the turnover of that particular segment due to which you fall in the type 1 the turnover of that one particular segment due to which you are falling under type 1 category, that has to be greater than equal to 25 crore. Supposingly, you are manufacturing 10 products. Okay. Now, one product makes you fall in type 1 segment. That product should have the turnover greater than equal to 25 crore. And turnover of all the products and services combined together should be greater than equal to 50 crore. This is type 1 rule. Now, the second condition to fall in the non-regulated services, the turnover of all the products and services should be greater than equal to 100 crore. And the turnover of that particular segment due to which you fall into this type is to be greater than equal to 35 crore. Here it is 50 crore, 25 crore, 100 crore, 35 crore. So you have to remember this. Cost accountant, as per the Institute of the Cost Accountants of India, they can perform cost audit. Cost accountant is appointed by the board of the directors. Company auditor, as per section 139, he cannot be the cost auditor. Penalties as per section 144(7) will be applicable to the cost auditor. Powers and duties as per section 141 and 143 are also applicable to the cost auditor, and cost auditor is in addition to the statutory auditor. Statutory auditor will be performing his functions separately, and cost auditor is in addition to the statutory auditor. They are not the substitutes of each other. Now, what are the exemptions to the rule 4? If the export turnover is greater than equal to 75% of the total turnover, export turnover, I am not talking about the total turnover. Export turnover is greater than equal to 75% of the total turnover, and operations from special economic zones, SEZ. So, these two exemptions, then you are exempted to the rule 4. Now, cost audit report is forward the audit report to the board of directors within 180 days of finishing the audit. The board will forward this report to the central government within 30 days, and the cost audit report should be in the XBRL format. It's a special type of format in which the cost audit report has to be submitted. Next is the government audit. As the name suggests, government audit evaluates and verifies the public entities, public sector undertakings, and the government organization. It's a very systematic and independent examination of the financial, administrative, and other operations of the organization. The money of the public, which is collected by the way of taxes, is used in these entities, in the government entities. So, to maintain the transparency, the government audit is very important. This audit ensures the accountability of the government entity in respect of public revenue and expenditure, so that every penny is being used subjectively, objectively. It is not put to waste. Therefore, the need for government audit is very important. The auditor presents the report containing audit findings and also the recommendations for the future actions. In our country, India, the auditor for the government audit is appointed by the Comptroller and Auditor General, CAG. The auditor submits the report to the Comptroller and Auditor General, who presents the report to the Governor or the concerned executive authority with own comments. So here I come to the end of the article. If you have any doubts, please feel free to ask me in the comment section. You want to give me a suggestion, you are more than welcome. Kindly like and subscribe to my channel. Thank you for watching. Stay safe, stay blessed.